I will never believe someone that tells me, no, my algo hasn't failed. It's impossible. That's impossible. I will not believe that. If you've never had an algo fail, I always say that you haven't been in the game long enough. This is one of the biggest misconceptions and biggest mistakes of new algo traders. In the beginning, it worked until it didn't. Because
I'm delighted to welcome our new guest today, who's a legend in the algorithmic trading world, César Barriga. He's not just another trader with a few lucky runs. César was ranked #1 algorithmic trader in the world by FXCM in both 2010 and 2013. His edge, relentless focus on data integrity, automated precision, and removing emotion from trading. After starting out inside a major brokerage, he saw the inner workings of how markets really move, and use that experience to build algorithms that have stood the test of time.
As of now, it's evolving at such a fast pace that AI will suggest what to do. Over time, I realized that the market doesn't move on indicators. It moves basically based on liquidity and sentiment, price action, and sometimes manipulation, I would say.
We talk about tariffs. When Trump came out and said, there could be a 50% tariff on the EU, we saw the reaction in the markets immediately.
The only way I found out of how to do this is to use the API connection from Twitter. So hooking it up to Donald Trump's Twitter account, it's changed the game completely. I always tell this story. So the algorithm went bollocks, and instead of placing a $200,000 position, it placed like a $20 million position. So I woke up in the morning and I was losing 100K in my rules to be successful at this business. If you touch or you change or you modify, you will break your model. I know people that have made a lot of money, have been trading manually. Maybe someone that had like $1,000 or 10,000 or whatever, and they turned that money into millions. It's not about being right. It's about being consistently disciplined. Being a disciplined and algorithmic trader, it's a boring game. They ignore risk, and they're just looking for dopamine. They're not looking for returns in the market.
If you ever wanted to understand how professional algorithm trading actually works, this episode is your shortcut. Let's get into it.
Hello and welcome back to
Blokes Trading to Blokes Trading to Blokes Trading
podcast. And for sure, you're going in the right direction.
It wasn't as bad as it is now, to be honest. But
Set again. That was it.
César, thanks so much for joining us today on our podcast. It's a real pleasure. It's the first time we've had an algorithmic trader on our podcast, so I'm really looking forward to picking your brains today.
Thank you so much, Jonathan, for having me here. It's a pleasure and an honor.
Yeah, for sure. And tell me, we're going to go through the whole algo side of things quite in depth. But firstly, you obviously got into trading yourself many years ago.
Yeah.
How did you transition from getting into trading in the first place to moving towards algorithmic trading?
Well, I started as 15 plus years ago as a prop trader doing futures. And at that prop trading firm, it was like a firm from Chicago that moved to Madrid. So this was like my first contact with trading. I was a complete starter or newbie on trading. So I didn't understand how trading works and all of the different products and markets, etc. So I started there, and there I knew someone that was starting to get into the algorithmic side of things, specialized in FX markets. And that's where, I got started step by step, trying to understand how to, first of all, just knowing the main concepts and knowing the markets, and then trying to program by my side, step by step, different rules I was applying to the different markets, in this case FX. So that's basically how I transitioned from the prop trader to a algorithmic trader.
Sure. And I suppose within that journey, becoming an algorithmic trader, did you have coding experience, or was that something that you had to learn along the way?
I didn't actually. I'm actually not like a really good programmer, because I started using different like drag and drop softwares where you can basically just input your ideas, and this software will just program your ideas. So it was basically, I always say I was more of a strategic guy, just having some ideas of what I want to do, like in an automated environment, and applying these to this software so I can have the code properly programmed. Obviously, I was in an environment where I was speaking with a lot of traders that knew a lot about programming, but I'm not necessarily like a programmer. So I just used many different apps or softwares to try to get there to what I wanted to program.
And from there, you became the #1 algorithmic trader in 2010 and 2013. I mean, how did you become, how did you get that edge? I mean, obviously, that's quite incredible achievement for somebody who's gone into trading, doesn't know how to code, wants to learn how to get into algorithmic trading, and then all of a sudden you're #1. How did you get there?
Well, it was. I think it was a combination of, at that point, I was understanding the market completely, like in depth. Also, I was being very disciplined, and I was doing like relentless backtesting on my ideas. So I wasn't just building models. I was building. I always say I was building the frameworks that adapted to those markets at that point. So my edge really came from exploiting different inefficiencies with precision timing, I would say, because of the market I was trading, and obviously with managing risk accordingly, like a quant would do, not like a cowboy. So I think it was that, basically.
Right. I mean, I suppose in terms of your strategy starting out, and you're talking about backtesting, what were you backtesting? Like, what was the strategy that you wanted to apply to the markets?
Okay, you mean my first, backtesting strategy, or in overall? My first one. I think it was something like a simple moving average crossover strategy for Forex. This is like, actually, if you try to do this with AI, I think it's one of the first picks the AI would give you. So it was like very, very basic. It was a crossover, I think. And in the beginning it worked until it didn't, because over time I realized that the market doesn't move on indicators, or it moves basically based on liquidity and sentiment, price action, and sometimes manipulation, I would say.
Sure.
So I think that was my first algorithm. But today my algorithms incorporate order flow, things like liquidity sweeps, stop hands, and everything based on institutional behavior. So back then it was a very difficult task, and now it's very easy. I mean, easy if you know how to do it, but you can find now that they're more adaptive and event aware, these algorithms, that it was back then.
Right. Right. And so starting from moving average crossovers to bringing in liquidity grabs and all these other information and data, it's all coming from historical information. And how much of an improvement, and how much have you seen with that algorithm? And is it learning over time as well during that period?
Oh, yes, absolutely. You can find a lot of failed algorithms, and they basically, many algorithms, you have to feed them to be able to evolve. As markets evolved, obviously what worked yesterday might not work tomorrow. So you have to be, I think that the key is the rapid feedback loops, and knowing when to remove or maybe retain a different model. So there's a little bit of, let's say, human work in that. You have to be able to adapt and to feed this algorithm with an adaptive edge, let's say.
And you're bringing in new indicators, taking out indicators all the time, trying to figure out the best way, because I'm sure there's kind of contradicting indicators that you're giving information to this algorithm. It's just about trying to find the right ones, I assume.
Yes, I think it's, if you, an example, for example, in FX markets is, This has happened to me a lot of times. So my algorithms worked in a range-based price action, pretty good. So my algorithms were adapted to that kind of, to being successful in a range-bound trading environment. And once you get like a trending environment in a trending markets, obviously it won't work. So being able to identify that and just switching from one to another, it will make you successful. Obviously now you don't have to do that, because with AI and tools and all of the technology we're getting, you won't even have to be worried about that. AI will detect if we're in a range-based trading environment or if we were trending,
Sure, 100%. And in terms of, like, let's say you have a range-based strategy, like, are you feeding that algorithm a bias? So we only want to buy off support, or we only want to sell off resistance, or are we looking to just snip on both sides of the market at that time?
As of now, I'm looking to both sides. But when I started, I was doing it manually. So I was placing the inputs on what to do and when to do it at certain supports and resistance and things like this. As of now, it's evolving at such a fast pace that AI will suggest what to do.
Sure. I want to dig deeper into AI a bit later in the conversation for sure. And tell me, like, have you ever had situations where your algorithms have actually failed for you?
Oh yes, absolutely. If you've never had an algo fail, I always say that you haven't been in the game long enough. For sure. It's. I think I said it earlier. You have to be adaptive, and the market's evolved. I will never believe someone that tells me, no, my algo hasn't failed. It's impossible. That's impossible. I will not believe that. It's either he's not trading algorithmically or he doesn't know what he's talking about. So yes, they do fail, and you have to be on top of things. And it's practically impossible to have an algorithm that worked 20 years ago and still works now. It's impossible.
Sure. And I suppose people that want to start getting into algorithm trading themselves, where do you see the biggest mistakes happening for these guys coming in, especially new traders coming into the market looking to build their own algorithms?
The biggest mistakes, I would say, maybe focus too much on curve fitting and optimization. This is one of the biggest mistakes. So, for example, I would say building systems that look perfect on past data, but collapse in live markets. So this is one of the biggest misconceptions and biggest mistakes of new algo traders. They think that optimization will build a robust system, and actually it won't. There are a lot of other things involved. So they will underestimate, for example, latency or slippage or psychological biases when manual overrides kick in, so I think these are the biggest ones.
Okay. And obviously you stress a lot about data integrity. How do you make sure that you have clean data coming back? And how should new traders also look for this same kind of data?
Okay, so what I do is I source data from premium providers, and what I try to do is run consistency checks daily. So I would look for outliers, missing ticks, and maybe anomalies. And for algo trading, especially intraday, if you're doing intraday, what I do is I try to combine intraday and swing trading, because what I do is in FX markets, and I think there's a very good opportunities doing swing trading. But especially for intraday, if you get one bad print, you can wreck your model's logic just with one bad print. So clean data is non-negotiable.
Yeah, for sure, 100%. And obviously, at the moment, the markets are so reactive on any news announcement. How does the algorithm perform in these kind of conditions? I mean, the conditions are completely different over the last number of months, right?
Yeah, absolutely. So everyone that's into trading knows that news spikes are dangerous. If you're running let's say like a mean reversion or low volatility systems, you will get stopped easily if you're using stop. So what my algos do now is they either step aside during high impact events, or they will, if they're on the market, they will adapt dynamically to what's by widening different thresholds. So maybe, for example, we will incorporate the economic calendars and a few sentiment filters that will help reduce false entries. So that's basically what we're doing. I would say we're trying to avoid being in the market during high impact events. As long as so for example, if we're holding like a swing trading positions and we are our stops are at break even point, we will try to hold that trade. But if we're not in a trade and we're using like pending orders, we will step aside. So that's how they work.
I mean, sentiment is having a major impact on markets, probably more so than ever before. And does it have any way of picking that up, or how do you, for instance, we talk about tariffs. We saw the markets react on Friday when Trump came out and said, there's going to be a 50% tariff on the EU. We saw the reaction in the markets immediately. Any tweet can make a reaction in the market. Does that make your job harder as an algorithmic trader?
Oh, yes, absolutely. I'm trying to figure out how to include all of those comments into into my trading. But the only way I found out of how to do this is to use the API connection from Twitter. So hooking it up to Donald Trump's Twitter account, which is kind of complicated because mainly all of these comments will come live. So it's hard to get a grasp of them initially, but it's changed the game completely, I can tell you. And I'm trying to figure out how to include all of those into my models. So I'm there. But it's been a wild ride, especially the last 2 months. Well, actually since January. But the last 2 months have been very complicated, especially in the FX markets.
100% for sure. And you spoke kind of about your stop losses and that being somewhat malleable in terms of different trading conditions. But in terms of your take profit levels, are they kind of structured, or are they also malleable depending on market conditions?
They're dynamic. I mean, what I usually use is volatility adjusted stops or take profits, and mainly you can see them that they're structure based levels. So you will find that some take profits are fixed, but others are trailing exits or time decay if the trade doesn't move fast enough. But yeah, basically it's they're I would say 20% fixed, 80% dynamic.
And how much input are you putting in yourself while markets are moving? You got the algorithm working away, but how much actually, hands-on are you within that on a day-to-day?
Hands-on it, you mean if I do an intervention at some point?
Yeah.
I try to avoid interventions.
You're just
as long as it's not an emergency or something like this. I've had a lot of experiences where, let's suppose I had to be in the market with a $200,000 position, and then I traded Asian markets like 10 years ago, and I always tell this story. So the algorithm went bollocks, and instead of placing a $200,000 position, it placed like a $20 million position. So I woke up in the morning and I was losing 100K, and it was a big account. So it was nothing in the beginning. What I didn't do is I didn't cut my loser. So it did that, and also it didn't place a stop loss. So I froze at that moment, and I couldn't even understand the situation. So what I tried to do, if I would view like a algorithmic model, it would have cut the loss. But there I was with no stop loss. So the machine just left me to the market, and I had to trade it manually. In 1 week, I had an open position that was losing like 300,000, 400,000. It was a big account anyway. It was percentage-wise, it was like a 4 or 5%. It went up to a minus 10% at some point.
Right.
So
What
I
was
had
your cutoff? Was 10% your cutoff? I mean, where were you just gonna, chop
yeah,
the head off?
exactly. So I was hoping, this was me all emotional. I was hoping to there was an FOMC, I think it was back when Bernanke was in the Fed, so imagine. It was a long time ago. So I was like, okay, there's a Fed meeting, this is going to revert and I will be able to trade out with a small loss, So it went to a minus, it was something like minus almost €1 million, which was crazy. So I had the worst week of my life because I couldn't like even sleep. And this was all because I was trading it. It was an emotional trade.
Yeah.
And it finally reverted to, I think it was minus 200,000. I was able to cut the loss there. So moral of the story,
Yeah.
if an algorithm goes bollocks at some point, just cut your loss immediately. I don't care what the loss is, just cut it.
100.
Don't do as I did. So yeah.
How do you see, traders try to avoid that same mistake? Is it protocols? Like, what was it that really kind of put you in that situation?
Actually, it was. As of today, I could understand what happened. This is gonna sound like a little strange, but I think it was the broker manipulating something.
Okay.
Because they knew something. At that point, I was with a group of algorithmic traders, and we were making a lot of money. And it was like one of the biggest brokers out there at the time. I just believe that it wasn't the algorithm; it was the broker just messing with us. Obviously, I don't have a confirmation of this, but it was the only like logical explanation to what happened, because we couldn't really understand what was going on. I mean, the code was perfect and everything. We just went through every single line of code trying to understand what happened, and there was no negative feedback. Everything was fine. So the only logical explanation was that the broker was messing with our positions.
You're making too much money on the V book.
Seriously, I think to this day that was the problem.
Sure. And what do you think, like certain risks that algorithmic traders getting into it, beginners getting in, like what are the small things that you would say to these guys that will just help mitigate some of their risk exposure?
I would say like I said before, like overfitting to past data. This is like the big one. Execution risk due to slippage or broker interference, like what happened to me.
But more on a technical basis, like with them setting up their actual algorithm, is there like key things just to watch out for?
Well, I would say like thinking that a system will always work without supervision.
Right.
I think that's a big one, because once you get into algorithmic trading, you think it's you plug and play and that's it, and that's not it. You have to be supervising. In any case, you don't. It's not plug and play and let's make money. No, there's a lot of things involved, and you have to be on top of things and not touching them, which is very important.
Right.
So many people that get into algorithmic trading, one of the biggest risks is they intervene in every single trade because
Sure.
they believe they have this belief that they are better than their algorithm.
100%. And
yeah,
and people who maybe potentially want to buy into an algorithm on the other side of the fence. Unfortunately, as you know, like I do, this industry is full of scams, unfortunately, in every which way. How, can people identify that is the right algorithm for them? How long does it need to be back tested for before you believe it's a legitimate strategy that's going to work over time?
That's a very good question. First of all, I would say it's a very like lonely process, unless you surround yourself with people that want to teach you properly, which is I was lucky enough to get to know this person at the prop firm that was willing to help me, because I was curious. But nowadays it's very complex to find out, someone that genuinely wants to, with no interest, wants to share their knowledge.
Sure.
Because obviously if you have something that works, many people just won't share it with you, or they will keep it to themselves.
Or yeah.
Yeah, so it's very, very secretive in that way, which is fine. I understand it. Yeah, I would say basically that it's very hard to get hold of someone that genuinely wants to teach you how to work. And nowadays with AI, it's 1000% easier
Sure.
to get started in algorithmic trading.
That takes us on to the whole AI side of things. Before we went live on the podcast,
Yeah.
I was explaining that we're kind of really pushing out the AI side of things, and that's where our focus is. And I was intrigued to see how that will integrate with algorithmic trading and how the two can play a big part in, getting even better results. And I know a lot of the financial institutions are already on top of this and way ahead of everybody else on this, but it is the future. It's the way things are going to go. I mean, if you can feed your algorithm with even better data and better decision making and almost feed your brain and knowledge into that with the right sources, and like you say, clean data, you can definitely get better results. And there's no doubt about it. It's never been easier to do than it is now as well, right?
Yeah, absolutely. I mean, I don't know what's really coming for the next 5 to 10 years, but it's going to be crazy. We were talking about it before it started. I just think that there's going to be more intelligent systems driven by reinforcement learning. So a lot of AI-based sentiment models, maybe cross-asset correlation analysis, things like this. And we will also see greater use of alternative data. For sure, blockchain, on-chain metrics and things like this, or even real-time consumer data. So many of the things that we have now access to, they have a certain delay. If you, for example, if you understand how macro data works, let's say you have some data coming out from US, like CPI or whatever, we have to wait for that data to come out. But now, I mean, in the future, I believe it will be, real time, live. Obviously, this will mean many people will lose their edge if they're trading during data.
Sure.
And many others will win an edge because they have, let's say, on-chain analysis or metrics that we don't have now.
It's foresight.
Yeah, exactly.
And do you see yourself incorporating AI in the future into what you're doing?
Oh yes, absolutely. I'm getting started as of now. But we were talking about this. There's going to be an evolution in AI to AGI maybe very soon, and this is going to change everything. Based on financial markets, that's for sure. So I use AI for example, event detection or maybe just sentiment analysis. We do a lot of sentiment analysis on different currency pairs.
Right. And you feed that bias into your algorithm, do you?
Yes. As of now, we're trying to incorporate it, but we use different data to use it against the retail trading herd. So when I say against, is that, for example, today I have it here. 70% of the retail traders are shorting the pound dollar or sterling. So this for us is a very strong buy signal. We try to fade everything that the retail is doing, and this we use an indicator that aggregates different data from 8 providers, I think. But imagine if I can use this in real time in an AI model. It would be so much easier. I wouldn't have to even think about how to start trading.
Before you got into algorithm trading, were you kind of a technical trader, a purist kind of technical trader? Is that your background, or would you have been a kind of combination of both?
I'm more of a technical trader. I obviously rely on fundamentals a lot, but I found out that when fundamentals and technicals align, it's just so much easier to trade. So I use both, but I'm in love with the technical side of things.
So you'll kind of have to adapt? Because I asked that question because
Yeah.
we got lots of guests coming on, and some people are just completely technical analysts. I'm like, well, put yourself in a dark room with a trading screen with how do you I don't know how you do it. I know, don't get me wrong, you can definitely get some consistency if you have
Yes.
good technicals, but without a bias, if I want to know if I want to be on a buy side or a sell side, regardless of the technicals. The technicals
Yeah.
for me are to just give me some timing around when I want to place that trade, so I can kind of
Yeah.
bring that trade to me rather than trying to chase it. But without that information, for me, I think it's so hard to dictate the direction of the market. So for you,
Yeah.
the fact that you have kind of a background in kind of sentiment fundamental, you'll adapt much like quicker and faster, I suppose, in terms of using this data to combine both to get real
Yes,
results.
absolutely. I always say that my opinion is not going to make money. So
Yeah.
my opinion in the sense that I can have a bias on what's going to happen, but if price action is not telling me that I have to do that, I won't.
Right.
So I focus on what the fundamentals are telling me, and I rely myself on technicals and price action to confirm that my bias is correct. So it's like if you have the opinion of X is going down, but you're seeing it's going up and it keeps going up, then just trade what you see, not what you're thinking,
Sure.
not what your opinion is having. So um
And
that's called um cognitive dissonance. So I try to rely on what I'm seeing, on the data that I'm getting, to take and to have a bias.
Sure.
So setting aside my opinion and my way of focusing on whatever, on what I think. So it's kind of complex sometimes.
That can kind of affect your algorithm if you're constantly kind of going, okay, my bias is this or it's this, and it's changing, and you're feeding it kind of skewed data almost then, right?
Yes, absolutely. But like I said, this is if I trade manually, which I sometimes do because I do swing trading, just for fun, because I rely on algorithms mainly. I will try to not have an opinion. And if the algorithms are doing, let's say, buying, I won't intervene.
Yeah.
That's one of my, let's say, my rules to be successful at this business. If you touch, or you change, or you modify, well, you will break your model.
Yeah. And do you think retail traders, especially coming in looking to build their own algorithms and so on, do you think they can compete with the institutions that have really, so much backing, or is the gap too big?
That's a good question. I would think, obviously there's a big gap. The tools that the institutions have and the resources are not available for retail traders. But I do believe that retail traders can compete if they focus on niche edges. For example, speed isn't going to be one of them,
Sure.
because you can't compete with, doing market making against Citadel. That's crazy. But if they try to be agile and creative and have like a strategic thinking, maybe they will get an edge on different niches or different products. For example, it's an example I'm thinking as of now, but maybe in crypto with the meme coins and things like this. I know people that have made a lot of money and have been trading manually, which is crazy to me now, but they've been doing it and making a lot of money. And they were having an edge because they were one of the first to be there. They were 24/7 just having a look at Twitter and different sources to get the information. And you can say they were lucky, but they were putting the work, So
Sure.
and that was a small trader, a retail trader, maybe someone that had like $1,000 or 10,000 or whatever, and they turned that money into millions. I know a few cases. A retail trader can have an edge, yes, if they're focusing on different niches that maybe institutionals are not.
Sure. And you actually do a lot of coaching yourself, and you have your own academy, right?
Yes.
And do you teach people about algorithm trading as well within that?
We're starting right now to do that. We created this module of trading with AI, which basically it's trading with AI just implies like everything, like automated trading, algorithmic, and incorporating AI into it. So basically, we're trying to teach someone that has zero knowledge of trading, that with different tools they can simply just get started easily and code their first script for TradingView, for example, or their first EA, expert advisor for MT4, MT5, or whatever. So yes, we're incorporating that.
Sure. And I suppose from the years of doing your consultancy and mentorship as well, what have you found that most helps traders? If you could say there's one key point that really kind of has a light bulb moment with traders, is there one key element, do you believe, that can give people just a slight edge or a slight advantage?
I think there's one which is I mentioned before. It's not about being right. It's being about it's about being consistently disciplined. I think that's one of the things that will help a lot of people, because once you get into the markets, there's like an ego trip you get. You think you're right, and you get frustrated when you're wrong, and your stops are, they've been violated, and you've lost money, and you keep losing money. So it's about being a systematic and consistently disciplined trader. I think it's about that. So what many people don't understand is that being a disciplined and algorithmic trader, it's a boring game. It's boring.
Yeah.
Because it's A, B, and C, and many people just get they want to chase the signals of buying or selling. Simply, they ignore risk, and they're just looking for dopamine. They're not looking for returns in the market.
Sure.
So, yeah.
You know firsthand what it's like to be down quite hard in the markets, and the psychological kind of impact that had on you.
Yeah.
When you're talking to traders and they're going through the process, how much do you think psychology has an impact in terms of if you're going to be a successful trader or not?
I would say it's 80%. 80. 80.
Yeah.
It's one of the big things in trading, the psychology. Also, I see this a lot amongst our students. Managing different emotions is one of the most complex things for human beings to do. Not just in trading, just in overall in life. If you bring those emotions to the table at a business, the result is not going to be positive. I can tell you that. That's why algorithmic trading eliminates all of this. It forces you to be disciplined.
Disciplined, absolutely. I mean, they're two key things, and I think that's one way to get psychology out of the window, is to go, look, okay, I'm thinking objectively, and I'm see the biggest problem is, and I speak to traders all the time, it's not just the psychology, it's the process. It's like it's the process of getting you into a state of mind. And if you're objective about how you trade, if you stick to certain rules and principles, and don't chase winners, don't chase losers, have a process, and then that's the best way to take away psychology. It's like psychology. I understand where you say 80% is psychology, but we say that, right? But really, it's not 80%. But once you become a trader, because once you become a successful trader, it's 20%.
Yes. What I mean is, for people that are starting, it's basically something really, really important. So what we do, for example, with in our academy, we start from scratch. So anyone can access to the academy, and there's a process involved. So we always tell them, look, if you came here to make money in 3 months, you're wrong. You're not going to do it. You're going to get frustrated. It took me 10 years to be able to be successful. And successful, I mean, to be able to be consistently profitable, but not with big returns, just average returns, maybe 15, 20% a year. That for me is it's successful. We're not talking about 3,000% a year, things like that. So I'm being realistic. And they go through a process where they get to first input. We show them different strategies, and they get to input all of those trades manually with the stop loss and the take profits, and they manage them manually. So if they get stopped out, they will do XYZ. If they take profit, they will do XYZ. So they take on average from 1 to 2 years to be able to just master this kind of strategies. And then we're moving them to begin to code for themselves different strategies that they will come up. So it's a process, obviously. And I'm mentioning this because the discipline at the beginning, the psychology, it's one of the biggest barriers amongst people that are starting.
Sure.
The fear of losing, being too greedy, typical stuff. But they take this to another level. This is the most important thing that I see on a daily basis that will ruin their trading. So they can be 100% sure that the strategy is working, and all of a sudden they will do some weird shit, basically, and they will disrupt all of their results. I always tell them that the trading is the most expensive university. So you can have a perfect track record, and you just mess up one trade, and that one trade will just blow your track record.
Yeah,
so
absolutely. But that's the thing, right? And with trading, it doesn't matter how well you're doing. And I've been doing this for 17 years. You're the same.
Yeah.
I mean, we're still learning, and
Absolutely.
The day that we're not learning and the day that we think that we know it all is the day that you're going to lose it all. And that's
I agree 100% with you. You always, I try always to be very humble, because if not, the market will humble you. That's for sure.
100%. And I think it's really important for traders coming through is to get the right mentor, get the right person that's going to guide them down the right path and give them the right information, because there's no doubt that will shorten your journey to where you want to get to, number one. But number two is there's no point wasting your time. You can spend all day on YouTube watching different people talking about trading. The problem is with trading, and a lot of this information out for traders is, if you're not a trader, anybody that talks about trading knows more than you, so they think that they can, hoodwink you into thinking that they can trade, and that's the problem, right? It's actually
absolutely.
It's about finding the people that actually do know what they're doing in this industry, have the years of experience behind them, and have your interest at heart. People that actually want to help you, bring you along the process, right?
Yes, I agree 100%. And also get someone that has a trading track record. At least, there are a lot of people that selling a lot of stuff, which I think it's fine, but try to get someone that is able to prove that they at least had 6 months of trading, live trading, with good returns and managing risk. That's it's a must, if you get that.
100%. And if any of our listeners want to find out more about what you're doing, how would they go about that?
Okay, so we just launched an English-speaking service for the academy, which is called legacy.blacksheep.academy. Or you can contact me directly through Instagram. My handle is Fade the Herd.
Awesome. And I love your picture as well on LinkedIn. It's a good one. Well, look, thanks for coming on today. I really appreciate it. And like I said, anyone who's interested, guys, we'll put all the links up in our details as well. So make sure to reach out to César. Thank you so much again.
Thank you so much, Jonathan.
Cheers, guys.
Cheers. Bye-bye.